In this All-Star Summer 2024 episode of Net Lease TV, we interview Dan Lekowitz of Encore Real Estate Investment Services and Alex DeLuch of Build Central. Build Central is a sponsor of Net Lease TV. Enjoy. Welcome to Net Lease TV. Great to have you guys on. Dan Lekowitz out of Michigan, Encore Real Estate. Alex DeLuch, Build Central, who's our sponsor for Net Lease TV. I've got some timely questions. We'll start with Dan. So Dan, what do you think? I know that the federal funds rate is like 5 to 5.5, and I always see Matthews. Matthews is always saying, when are they going to cut rates? Because I guess there would probably be a direct correlation with shorter term financing, where there's all those all cash buyers for their 1031s. Eventually, if those short-term rates drop, they can start to monetize that asset and start to get some of their money back. Is that what you're seeing out there, or are most of your deals all cash or financing right now?
Yeah, I mean, listen, the number one factor, in my opinion, that dictates market overall transactional volume in the market is going to be simply the delta between the rates that you can borrow at and current cap rates. That's been the pain point in our market the last 24 months, as you alluded to. Federal funds rate went from effectively 0 to 5.25, 5.5, and cap rates did not move up that much. And obviously interest rates are not going to trend exactly in lockstep with federal funds rates, but they went up. Rates were at 2.75, 3%, 3.25, and then they've got all the way up into the sevens, and cap rates did not move 400 basis points. So that's number one. Number two, I'm definitely seeing more of a push and a trend towards all cash transactions. I myself really pivoted and moved a lot of my business into the vacant assets, the short-term assets, and strip malls. Vacant and short-term because they're more development plays, right? They don't rely on the same level of funding as a traditional 5 or 6 cap deal does. And then shopping centers, because those traditionally trade at a significantly higher cap rate, that gives you that delta of borrowing at 6.5% and having a property that cash flows at 9%. So I'm definitely seeing more of a push towards, all cash transactions. What's going to happen moving forward? I would bet that there's going to be at least one decrease between now and election time. I would have thought 2 decreases, but we're really running out of time. So I'm kind of wondering what the Fed is thinking, because, really there should, at this point in the game, we should be decreasing rates, in my opinion.
Yeah, that's a great point. The one thing we're seeing today, the Dow's down 300, Dan and Alex. And, right now we're right around 200 to 250 over the 10-year treasury. So I'm at like 6.25 to 674 for investment grade occupied tenants like 7-Eleven, which is on Alex's Build Central 7-Eleven. We really like Starbucks. But that would be for like a 5 or 7 year fixed with like a 25 to 30 year AM. So that's much better rates than we've seen. I mean, I've seen some lenders like 6.75% to 8%, which is kind of crazy.
Yeah.
So I agree with you. One thing that we're seeing, I don't know if you saw my other episode of Net Lease TV, that those borrowers that borrowed at like 2 to 4%, a lot of them now are upside down. Do you think there's listing opportunities there? Because
no doubt about it.
We're having a tough time refinancing them unless rates drop down to like 5 to 5.5 at like a 120, 125 debt coverage. Then we're pretty close to refinance 1-for-1. But Some of these guys, they got pretty high leverage when rates were lower. I'll let you. Sorry about that, Dan. Go ahead.
Yeah, I mean, I'll give you a real live brokerage story right now. I mean, I have, without revealing too much information, I've sold a portfolio of a certain type of net lease properties over the years. And, as the market was doing what it was doing over the last few years. And about 3 years ago, I listed 2 of these properties for this developer at around a 6.25 cap. We got offers at a 6 cap on one of these deals. And the developer owner said, we're not taking it. We're going to hold it for the investors. No problem. Then last summer, I listed the property for a 5.85 cap, even though I knew it was pretty unrealistic. We didn't get any action and took the property off the market. This property has been a thorn in my side because I hate listings that don't sell. And then in November of last year, I got a phone call that said, "Hey, my debt is due." I said, "When's your debt due?" He said, "It's already due. I got some type of extension, but it's already due, and I need to sell this property now. What cap rate will move it?" So we listed it at a 7 cap, and we just sold the property about 10 days ago for, I believe, a 7.17 cap. I mean,
Wow.
there's a lot of lessons for me, or a lot of lessons for investors in that story. Number one, sometimes when you think you could get better for a property, you just can't. You can't beat the market. We could have had a 6 cap a couple years ago, but instead we settled for a 7.17 today, right? That's number one. Number two, debt coming due is a huge motivator, right? I have another listing right now that just went under contract where there's a partnership dispute. And what really pushed them to list with us is that they had to refinance the property. And they said, "I don't want to refinance. I don't want to be locked in bed with this guy. We're not getting along." So there's no question that debt coming due can be a big motivator. And you've got a great point. I mean, we're not dealing with 30-year fixed residential loans, right? We're dealing with commercial loans that might have a 5 or 7-year balloon. They might, you might have to refinance after that amount of time. And these people that got their great rates in 18, 19, 20, guess what? That debt is coming due. So if you're a broker, that's something you should be looking at is loan maturities, because that's going to be a major motivation to sell.
Yeah, for sure. No doubt about it. No doubt about it. And you want to watch my episode? I use algebra to figure out, try to figure out a case study of those people that got lower rates. At what new rate would they have to get to be able to refinance at 1-for-1? I'll put a link to that episode. It's a pretty interesting episode.
Yeah, that's very valuable.
So Dan, do you use technology in your brokerage?
I mean, absolutely. Who doesn't in today's day and age? I mean, everything from email blasts to CRM to, leveraging, different types. For example, something simple like postcard campaigns. I sent out 4,000 postcards in West Michigan to shopping center owners because I sold 6 properties within a few miles of those, shopping centers. It's not like technology that in the colloquial sense, but it's me uploading a list, me getting, a freelancer to put together the list, and then working with a company, a third party who's going to then send it out. So yeah, definitely, technology, social media is a huge part of my business. Obviously, that's how we met. And I think that if technology is a tool. So if you can leverage it to be more successful and or more efficient, why not?
Sorry to say, but I think our industry is going towards technology. All right. I think
Isn't that a good thing though? Why is that? Why are you sorry to say?
It's a great thing. It's a great thing if you harness it. And I think that everything's going to go virtual. And that transitions me into our sponsor, Build Central, Alex DeLuch here. So, Dan, if you could learn about all the future, all the developments, right? You could pull up a map and find out all those developers. Maybe I think you're on the list side a lot of times, right?
Yeah,
And
definitely.
you could call on those developers and try to get listings. Would you want that information?
It's very valuable. Absolutely. Knowledge is power.
So
Data is power.
That's what Alex DeLuch's company, Build Central, does. I'm using it. I've already got some deals from it. It really monetizes. So I'm going to let Alex share his desktop here, and we're going to go there now. All right. So Alex has the Build Central app pulled up here. It's pretty cool. Dan, do you have any, like in Michigan, if Alex goes to, what city are you in?
I live in Birmingham, Michigan, and my office is in West Bloomfield.
See if we can go to Birmingham.
All right.
Or Michigan.
Yeah, thanks, Chris. I appreciate the introduction. And just quickly, Build Central is basically a tool to track who is planning to build what, where, and when. So we're a construction pipeline. We get that through machine learning that pulls information from municipal minute notes, and then a team of over 150 researchers that begin to call and email and do a lot of the hands-on work that many of you are probably doing on your own. So I've pulled up Michigan. This is in our retail module. So you're just going to see retail developments here in planned retail. And you'll see you can actually turn on existing retail locations as well. But I can go here on the map and search Birmingham. And we'll zoom right into the Birmingham, Michigan area.
There you
So
go.
these are a few projects. Dan, I don't know if you recognize any of these.
I
Yeah,
bet you Dan likes the Porsche dealership.
that's right
He's
by my
planning to
house.
get
I could walk
another
there.
car.
Yeah, I can see my house from here.
Really?
You'll see the color schema. The yellow means this in planning. So this is a Porsche dealership that's currently in the planning stage.
Now, have you heard about the Porsche dealership, Dan?
No, it's
There
interesting
you
to me because
go.
there's a Porsche dealership right in that area. So unless they're expanding or moving, no, I didn't hear that they were building anything.
Maybe it's buffering. Maybe they're not. We'll see here in a second. Okay,
There
there he
you
goes.
go. Yeah, plans call for the demolition of existing dealership and the building
Really?
of a new 3-story Porsche dealership.
No kidding. So that'd be very valuable if that this was an asset that I was looking to broker.
Yeah, for sure. Show him, Alex, how you would do. What's a common tenant growing in your area, Dan?
But definitely Starbucks as well. But I would say like oh man, what's the one that they just built on right in where this map is? Oh come on, give me some Tommy Express. Can't believe I forgot that.
All
Yeah,
right.
I don't know if he has all tenants. He has the major ones, but we'll look at that. Let's look at Starbucks. Wow, Starbucks. Okay. We'll look at Starbucks first, and then we'll come back to your tenant.
So it looks like there's one here on the west side of Detroit.
So now that purple, what does that mean again, Alex?
It means
Versus
it's under
yellow.
construction. You'll see the estimated construction value. So this is what they would bid out to a GC. So
right.
this is the price that it costs to build it. The name of the shopping center associated with the shopping center, some details that it's a conversion of a blank space into a Starbucks, and then news and notes dating back to when we first picked it up in 2022.
Try to find one where it gives you landlord information. Click on a couple other ones there, because the ones I've seen, they give you the landlord, and that's what Dan and the rest of the brokerage community is going to want to see is, okay, there's one. Okay, so Marcus Management out of Birmingham. Have you ever heard of them, Dan?
Yeah, I have.
The cool thing is they give you the number there. Build Central gives you their number. Scroll back down for a sec, Alex. See, it gives you their address, so you can put that in your database. You can call that number and scroll back up for a second. What's the address of that? And then you could just call them and say, hey, look, I heard you're doing a Starbucks at 12730 South Saginaw Street, Grand Blanc, Michigan. Would you want to list that property? So there's a lot of different avenues that you can take with Build Central, but I think that would be the main one. Is that the main reason why people are getting it, Alex? To try to get listings? Or for me, it's trying to get financing leads, but for Dan, I would imagine it would be listings.
It would probably be
Yeah.
listing. There's a lot of different customer types. Some for site selection. You understand what's coming into the market and how it may affect the evaluation or potential of that property. But definitely a source for listings as well.
So go back and try to see if Dan's tenant's there, because he mentioned a tenant. What was your tenant, Dan, that you wanted to try to see if it's?
I mean, you could really do any of the car wash tenants, but I was thinking about Tommy Express is a popular one.
Tommy Express.
Tommy's Express, yeah.
See if you can find that Tommy's Express.
They just finished building one half mile from my house.
There it is. He's got it. Insane. I mean, this technology, it blew my mind when I saw it. I told ICSC to do this years ago. And Alex and Build Central figured it out. They're missing the boat. They could have had like segmented, where you could do a search. I want to talk to all the developers that are doing Starbucks at the future ICSC events.
Yeah.
Actually, Build Central, Alex, you could do an event now. Call it the Build Central event. And, have your own event for net lease, which is, you're kind of working backwards, but ICSC should have thought of this stuff. But
And
the
you've
cool,
used this, Chris, in this fashion as well. You've had some success with Dutch
oh
Brothers.
yeah, yeah. In fact, I'm doing some construction loans based on people I got off of Build Central. So it's already monetizing for us. It's amazing. This technology is amazing. And we did the other Build Central case study where I went to the Chick-fil-A right off of Palomar Airport Road. That was one I didn't know about. They're doing a Raising Cane's right near Rosecrans in San Diego. He hasn't started yet, but I learned about it through Build Central. Is there a specific location, Dan, that you're interested in, or?
I mean, like I said, they just finished building one that's right near my house in Birmingham. I don't know. Obviously, we're looking at the map here. It looks like there are several more that are popping up in the Metro Detroit and surrounding areas. This particular one, I don't know if it'll show up, Alex, because it is a completed project.
Yeah, it may not show up in my search. We do have openings from Chain XY, so we can search that here and see if it shows up. Believe that we have it listed under auto, if I can find that.
And while Alex is doing that, I just want to say, if you're watching this, you can reach out to Alex, mention NetLease TV, mention Dan and I in this episode, and Alex will give you a discount on the service. But I think this information, you're kind of in the dark. Without this information, you're flying blind. I mean, and this is the way it's going to be in the future. So any kind of advantage you can get for brokerage, this stuff's huge.
Yep. Yeah, that's right. That's exactly right.
Right, Dan. It's kind of mind blowing.
Yeah, if the tool's there, you might as well learn to use it.
Alex, how should they call you or email you to start to sign up? Or get a free, do you do like a free demo that you can give them, kind of like you're doing here?
We do, yeah. If you go to planretail.com, you can submit a form, and one of our sales reps will be in touch with you to go through a demo. And I think there's even where you can print out a analysis of a trade area on Plan Retail. So if you go to planretail.com, that's the best source.
But how can they call you? How can they call you on your cell?
So you can reach me, my direct line at 770-450-1227. And that'll go directly.
What's your email there, Dan, Alex? What's your email where they can email you?
Adeloach, ADELOACH, at buildcentral.com.
Okay, awesome. All right, we're going to go back to our questions with Dan. Unless, Dan, do you have any more questions for Alex?
I mean, I love what you're doing. I think it's a very valuable tool for people who are, trying to work with developers and developments. And I just love seeing this because this didn't exist 10 years ago.
Yeah, I mean, it's amazing. This is amazing. Dan, on the net lease front, are you seeing supply and demand coming in more equilibrium? I know for a while there, we had less supply, right? So
yeah.
Cap rates were super low. Is there more with guys like Build Central? I don't know if Build Central tracks that. That's another interesting thing to see the supply of developments. If you guys ever had those stats to watch how much additional developments coming online. But go ahead, Dan.
Yeah, I mean, listen, there's a high demand for quality product and there's a lot of supply for garbage. That's what's going on right now. And I think that adds to this market dislocation that we've been in for 18 to 24 months, highly propagated by the interest rate hike. It may be solely propelled by that. So, it's really just a matter of, if you have a good product that's going to move quickly, and if you have garbage product or it's not priced right, like in any market, especially today, it's going to sit there. So, I'm having a lot of conversations with clients along the lines of, listen, we listed at a 7.5 cap. We thought that was aggressive, but we wanted to try. and the market told us that's not the right pricing, so we're gonna have to move to a 7.75, or we're gonna have to move to an 8 cap. So there is a lot more price adjustment going on today. And then I would say that the supply of buyers has diminished because, number one, financing buyers, for the most part, in deals that are sub 7 cap, they're just not a player. So that's kind of disappeared. And number two, I think there's a general sentiment of a wait and see approach, which is I understand it's based on caution, but in this case, a lot of investors are sitting on the sidelines saying, you know what, we're going to wait for those rate decreases to sell, to buy. I'm sorry. And believe it or not, a lot of sellers are saying the same thing. They're saying we're going to wait until rates come down to really move our pricing too much. So you really have people that are supposed to be in working to get like this, and they're kind of just like moving like that back and forth. So it's definitely a challenge for everyone involved. But right product, the right brokers, the right pricing, it sells. Deals are still getting done. The sky is not falling. I tell people, stick through this, and you'll be able to get through anything. And when you get to the other side of this, not only are you going to be better at what you do, but the market is going to be available to you to continue to just penetrate and move forward.
Yeah, the number one thing we hear.
Oh, go ahead, Alex. Go ahead.
Yeah, the number one thing we hear from our retail customers is that they can't find space in the markets they want to be in. So a lot of those hot markets in Florida and Texas, even Southern California, there's just not space there. So I think the demand is definitely there, and there's construction growth, but just not at the rate to fill the demand of some of the retail customers we have.
That's a very good point. I just want to make a little caveat to what I said before. That's all from an investment sales perspective. If you want to look at retail from an occupancy perspective and from a leasing perspective, I mean, we're at historic lows. We're at an 18 plus year low in terms of retail vacancy in the very low 4% range. That means that almost 96% of all retail nationwide is occupied, which is absolutely incredible. So, that also just goes to say, like, people, I feel like that the doom and gloom is what sells, the headlines and gets the clicks. Retail is not dead. Retail is alive and well and thriving, and there's tremendous opportunities. And from my perspective, another part of this that's very interesting is just the repurposing of these vacant boxes. I mean, think about your Bed Bath and Beyonds. Think about your Party Cities. Think about your, even last year, there were 396 Burger King units that went through bankruptcy from 3 large franchisees that, 2 of them had 100 plus units. All those sites get repurposed to something. So there's opportunity. Look at I know you didn't want to get into this, Chris, but look at Rite Aids. Look at CVS's and Walgreens that have closed. I mean, Rite Aid's going to be closing 300 stores here in Michigan and Ohio. Every single store in Michigan and Ohio. Those properties, in many cases, are primetime real estate. Main on main, great corners, high traffic counts, great visibility, great population density, average household income, you name it, they've got it. So the person or the people that figure out how to best take that box and bring it to its next highest and best use, those people are going to have massive success. This is a time of great opportunity without question.
There's no doubt about it. You got to adapt to the times. You just got to keep adapting. You can't just do the same thing you did 5 or 10 years ago. And like you're saying, I bet you there's a lot of developers, their mouths are watering. They see a site that was an amazing site that they're just getting an opportunity to go in there because Rite Aid had too much debt. It doesn't mean that the site is bad. It just means Rite Aid shouldn't have gotten so much debt, and they had a balloon and they defaulted or whatever.
Yeah.
So it doesn't mean it's a bad location. It could be an amazing location that a developer is like, oh wow, I can't believe this is available now. I'm going to get in there and try to get that deal. So I totally agree.
Yeah. And there's another huge lesson there and learning point. I mean, if you look at the pharmacy space, it's a story of oversized boxes and oversized rent. That is simply what it is. And I get it. I understand from a development perspective why it made sense then. But from an owner perspective, I tell my clients all the time, if you can't replace your rent, you're holding on to a potential disaster. And when, Walgreens is paying you $28 a foot and the market is $13 a foot, you tell me what's going to happen. And if you want to talk debt service or financing, if you have debt on that property, you won't even be allowed to put a Family Dollar in there that's going to pay you $120,000 a year when you're, because that's not going to get you towards your debt service coverage ratio. So that's something to definitely pay attention to. And I think that should be the major lesson of this whole pharmacy, situation.
Let me add something because I'm a little bit older than you guys. I'm 58. You guys, how old are you guys? How old are you, Alex?
36.
How old are you, Dan?
I'm 40.
So you guys are, or maybe more like would you say you're millennials? Millennials. No, a little bit older than millennials. So one thing, you know the guy Reza? Reza? You know Reza?
Reza?
He does, I think that's his name. He does a podcast with Carly Iacono.
Oh, Chris Ressa.
Chris Ressa, yeah.
Yeah.
And
Retail Retold.
we're all listening to each other's podcast. I was in my jacuzzi listening to his podcast, and you can always learn something from anybody's podcast. And what he was saying, he had a guest, and he said that people your age lived in cities, but now they're starting to have kids and families, and they can't do that anymore. So where retail was languishing out in what would it be? In the country or out, not in the city. Now it's starting to flourish because younger people can't afford to live in a city with their kids in an apartment. So they're moving to the outskirts, and all those grocery stores that were languishing are really starting to flourish now. I thought that was pretty interesting. But that was all. It's a demographic trend more than anything. Everybody your age is coming of age. They're starting to have children. They're starting to have families. Like Dan's taking his kids to the races.
Exactly. You know what? It's funny because it used to be that these, both from an investor perspective and a corporate perspective, everyone wanted downtown, average household income super high and the population density through the roof. And I think things will change when we had a lot of riots going on, in the last, let's say, 4 or 5 years, and a lot of crime and a lot of theft and vandalism. A lot of these retailers are closing up shop. I mean, I was in Pittsburgh a couple weekends ago, and I went to a Target. I couldn't believe it. There were signs everywhere. If you're under the age of, I think it was 18, you are not allowed in this store without an adult, because they were just having so many issues. My point is that to your point, Chris, things have shifted, right? Investors don't necessarily want to be in that really, core area for a lot of the reasons I just mentioned, and the corporations maybe don't as well. So I think with this, I call it a suburban sprawl. I think we have seen these retailers move out into the suburbs, and the investors say, I want something. If I'm going to own, I want to own out there for a variety of reasons. So it's an interesting renaissance that we're watching.
We've seen the growth of multifamily and single family for rent in these areas, just due to the high, interest rates and the prices of housing right now. In a lot of the suburban areas, and even outside of suburbia, you're starting to see multifamily be built, where maybe 5-10 years ago it was mostly in your city centers.
Yeah, for sure. Multifamily starting to, because you can't afford. I mean, if you're like my daughters, one daughter is 24 or 23. The other one's 20. Where are they going to live? I mean, an average house around here in my area is $1 million. There's no way.
Yeah.
So they got to start to look, maybe Inland Empire, in different areas that are affordable. And the problem, just like net lease, Dan will tell you, the lumber is skyrocketed, concrete has skyrocketed. So it's a supply issue. No matter what Biden says or anybody, without supply of housing or net lease, you're going to have higher prices.
Listen, there's no reason, Chris, that for single family houses that prices should have gone up when interest rates went up 400 basis points. There's no reason. The only reason is because we have an undersupply. I mean, on my block, there's someone who bought from a developer in 2020, the hottest time in the market, or 2020. I'm sorry, it's 2021, and they bought that property. They put it up for sale my wife and I were laughing because they were asking like 150 grand more, and we're like, that's crazy. That doesn't make sense. They sold the property for almost 200 grand above asking. So they netted over $300,000, not because interest rates went down. They didn't. I bet you that family's rate was 3% or less, right? My rate is 2.77. And they sold to someone that's borrowing at 7 or 7.5. And still, because of the lack of supply, the price went up that significantly. It's unreal.
I'll tell you a trend that I realized. When my house is going up, my brokerage business goes down. And when my brokerage business starts going up, my house starts going down. So what does that tell you?
Yeah, you tell me. Explain that correlation.
My business goes up when rates go down. So when rates are coming down, the housing prices here are going down. And when rates are going up, the housing prices are going up. And the reason for that, it's not the correlation that you would think. The reason is that everybody's got these real low rates of 2%. And when they start to see rates falling, then they figure I can sell and buy something else with lower rates. So as rates have stayed high, it's kind of like the opposite has happened. People are staying in their houses until rates start to drop, of course, and then they'll sell and they'll go to buy something else. It's kind of weird. It's negative. They wanted to slow down housing prices, but actually, as rates are high, nobody's selling, and it's done the opposite. It's done the opposite, which is really weird.
Yeah, it is, and that's a fascinating analysis, Chris. What I think is interesting is, and no one talks about this, is that we have a very big spending problem in this country, and we have a very big debt problem, right? Our debt service is over $1 trillion a year, $1 trillion per year. So, and tell me if I'm wrong, but the way I view this is that interest rates have to come down unless we're going to default on our debt, that's not an option, right? And the reason is that as we have to replace that debt, we're going to be replacing it with higher and higher interest rates, and that's going to cause our debt service to go up and making it unbearable. So again, default on debt, which would be catastrophic for the country and the world, or lower interest rates. Am I wrong? I mean, that's how I view the situation.
Yeah, I agree with you 100%. That's what the Federal Reserve is scared about. And if not only public debt, but our debt, right? Everybody's trying to get the one thing that's really sad. I went in, I brought my bike in. My bike chain broke. I ride my bike to Starbucks. I'm trying to get exercise here in the summer. And the chain broke. So I went in and I was talking to the guy at the bike store and I asked him, I'm thinking of getting an electric bike. Why doesn't somebody design a really nice electric bike domestically? He says, there's no way. We've all looked into it. It'd be way too expensive.
Yeah.
It's really sad when you can't, there's opportunity in America, but then when you go to figure the regulation and the cost of building something, manufacturing something, you can't compete with China even if you wanted to. And that's a sad state of affairs, in my own opinion, when we can't, if somebody has a dream, an idea to do something, I want to build something, I want to create something. And so, that's why our economy is kind of languishing. We really need to, whoever gets elected, whether Trump or Biden, we need to start to support our manufacturers and try to come up with some ideas that support them instead of, a guy tries to design something and he finds that with all the red tape, there's no way he's going to be able to design a beautiful bike that he could sell domestically at a competitive price with the third world countries. That's a sad state of affairs. But anyway, speaking of politics, who do you think's better for net lease, Dan? Trump or Biden? I mean, I know Trump's got women problems sometimes, but putting that aside, who's better economically?
I don't know. My dad always taught me, two things you never talk about anywhere, even with family. It's politics and religion. Right. But I'll tell you this: like, you're probably the only guy that could get me could pull something out of me, Chris. To be honest with you, what I'll say is, like, I'm a capitalist. I love business. I believe in the greatest amount for the greatest good, like for the greatest number of people. And I just feel that things like preserving the 1031 exchange, things like going back to 100% bonus depreciation, things like lowering taxes. I know in this country we have this romantic obsession of a war against the wealthy, which makes no sense to me. But I believe that overall, when you lower taxation, you actually increase economic output for the entire country. I think it's a good thing overall.
Right?
Exactly.
Yeah,
so who's better? I'm not going to answer your question because I'm not going to endorse a political party, but I will say, to me, it's pretty clear that if you're interested in raising taxes and getting rid of the 1031 exchange and all that stuff, that's not going to get my vote. I'm a capitalist, and I want the greatest good for the greatest number of people.
I totally agree in that regard. Totally agree with everything you just said.
It's incentivize small business, incentivize commerce, things like the 1031 exchange. They create so much transactional volume across all different spheres, right? It's a great thing. If you allow someone to preserve their wealth and then reinvest it, it's great for the community, it's great for the economy. I think we need a macro view, and we have to stop this war against the wealthy. It's terrible. The wealthy and the business owners are the people that help to build this country. And in this country, generally speaking, you have the opportunity to go as far as you want, right? So I think that we should nurture that. I think that we should incentivize that.
I mean, go on TikTok and look at some of those early videos of New York City in like 1920, and you can tell we were like a leading nation. We were building stuff. The economy was great. We were a leading economic empire. And if we don't start to try to figure that out again, it's not going to work. Eventually, we're going to implode, and nobody's going to want our currency. We're not going to be the leading currency
we got to be
in
careful
the world, as everybody's saying. And so we got to be careful with that. I do believe that. I know, Dan, I keep seeing deals closed on LinkedIn. What did you close recently?
I closed a absolute triple net medical office building. This is the third one I actually closed for this particular developer. There was actually a write-up, I think it was yesterday or Friday, on CoStar about the deal, which was kind of cool. I always love that little tip of the hat. Recently sold a shopping center in Grand Rapids. It's one of my specialties is West Michigan shopping centers. And then I have a former CVS under contract that's going to be redeveloped. I'm excited to kind of watch as the broker from afar that redevelopment. It's a local deal, so maybe I'll go actually to the site and watch it as well. And then we've got a pretty large, 55,000 square foot or so industrial building in Lancaster, Pennsylvania that's under contract. So excited about that. It's just a time to move forward. Not an easy time to be a broker, but definitely a time of opportunity.
I did a CVS with Encore. I don't know if you knew that. Did you know
Which
that?
one was that?
It was a couple
who was the
years
broker,
back.
I should say.
Okay, so I normally don't represent buyers. I'm doing mostly financing, but in this regard, it was a couple of I don't want to say their names or anything because it's confidential. But we did an all cash deal with you, and I represented the buyer. And
Really?
your seller made us go non-contingent at contract. So
How long ago was
this? They had to release 150,000 at contract.
Wow.
So I told them, go out, get the environmental right away, get all your docs. My attorney Jim did all the due diligence very quickly, and we closed in 2 weeks. This was like 3 or 4 years back.
Oh, really? Wow.
And the
that's
only
awesome.
way the seller would go into contract is if we went non-contingent.
Well, during those times, you could make that request, right? That was very common. What so you actually brokered the deal as I
represented the buyer. Yeah.
Wow. No, not a debt deal.
It was not a debt deal. It was a little nerve-wracking, but I had my attorney Jim. I felt pretty comfortable having him do all the contract and everything, and they were female buyers, and they were pretty aggressive. They had a consultant, and he said, we really want this one, and the reason why we want it is we get all our money back by the end of the lease term.
Yeah.
And he says, we're not seeing that anywhere. So when he figured the rent every year, I can't remember what the remaining lease term, but they got all their money back that they put in purchase price wise. So he's like, we want this deal. We want this one bad. and we want to go ahead with the non-contingency. We're willing to take that risk. And they did it, and it closed. And I represented them, so it was a pretty good deal.
Wow. That's
But
awesome.
I saw Evan Lyons is doing a lot of deals.
Yeah, Evan's great. I
Your
mean,
counterpart, Evan Lyons.
our offices are
What?
right next to each other. I like him. He's a great guy, and
How,
he's doing great things.
now, let me ask you something, because he's pretty articulate like you. Is that one of the characteristics your brokerage looks for, or is that a coincidence? Because both of you guys
No,
are very articulate.
thank you. Yeah, I think, as someone who's in a position hiring junior brokers, it's definitely something I look for because, if you're making money, you're on the phone, right? And if you're on the phone, you
Sure.
better be good at talking to people. And, some
Yeah.
people I could talk to for hours, and some people I want to get off the phone with for right away. So if I'm a broker, I want to be the person, number one, the guy on the other line or lady on the other line, they want to stay on the line and they want to pick up the phone. So I think it's tremendously important, Chris.
So, I couldn't agree more. Alex, what are some future ICSC events you're coming to? That if somebody wants to, you got an amazing booth. Have you seen their booth, Dan? Their booth
No,
is
I have not
amazing.
actually.
You got to come next. I didn't know what Build Central was, and I went by there, and he explained it. Let's do an episode of Nat Lease TV.
Nice.
But their booth is really cool, and they've pumped quite a bit of money into their technology. What's the next ICSC you're going to?
We'll be at ICSC New England.
What is that?
That's next month, the end of next month at the
Nice.
Encore Casino.
So okay. So if you're coming to New England, definitely go by Build Central, and talk to Alex and check it out. Let them give you a demo, because it's amazing technology. I'm going to Palm Springs. You guys got to come to Palm Springs, and hopefully they'll have like tennis and golf. Last time I did Palm Springs was years ago. So no San Diego this year. It's going to be Palm Springs, but you can go by the pool, which will be a lot of fun. It'll be warm, and have some margaritas or whatever at the pool, kind of like Vegas. Drive your car from Michigan to Palm Springs. There you go. That'd be a fun rally.
Yeah.
Right?
Yeah.
Now, Dan, if somebody wants to list with you, right? They've got a car wash deal, a Starbucks. One thing we said today, Dutch Bros is a hot one. I'm financing quite a few Dutch Bros. How do they reach out? Do you meet people in person very often, or do you do like online meetings like this? How do you normally deal with clients?
Yeah. So, I mean, first of
Do a
all,
listing type presentation and to sign them up.
right. So, number one, I'm on LinkedIn. You can reach out to me there. I put out daily content. I make it a high priority every day to put something together. My first name is Dan, obviously. Last name Lukowicz, Lewkowicz, again, Lewkowicz. Another way to reach me, if you own property, you want to know what it's worth, or you're thinking about selling, if you've got a deal and you want a second set of eyes on it, even if it's not mine, or if you're trying to get into commercial brokerage or investing or whatever, you just want to talk shop, please reach out. I do my best to make myself available. I'll give out my direct cell phone. It's 248-943-2838. Again, 248-943-2838. Don't hesitate. Reach out. Tell me that, you saw me on Net Lease TV. I'd love to help. As a response to your question, Chris, yeah, I mean, the way that it works is I compile the necessary information from the potential client, whether it's a lease for a single tenant deal or profit and loss report, rent roll, maybe leases for a shopping center. We put together a very nice, 20-page or so offering memorandum, letting them know what we think the property's worth and what our marketing plan will be. And then typically we have a call over the phone to discuss. Very rarely people will want to do a video call, but if they do, we'll accommodate. Obviously, I will travel when necessary. I'll do pretty much whatever it takes.
That's awesome.
But the vast majority of our contact is typically over the phone. And believe it or not, I have clients that I've done a number of deals for and have gotten to know them intimately well, but we've never met in person, which kind of boggles my mind even till this day.
I'll do a little quick commercial for Marabella. So I would love to hire more brokers that have the mentality of like Dan. I want to get more originators that are willing, not afraid to get their hands dirty, get in the trenches, do cold calling, do research on Build Central, talk to developers that need construction financing, perm financing, that are willing to work, maybe 5 days a week, 6 days a week, that aren't afraid to get in and really, really try to make some deals. It's hard to find today, believe it or not. It's hard to find those kind of people. But I've been doing this for, 30 years, and I've always made money for Marabella Commercial Finance as a broker. It's not easy, Dan will tell you. It's you're constantly doing, I'm still cold calling. I'm still doing everything that's necessary to do good brokerage. The other thing that we're doing right now, my brother and I are developing our center in Ohio. So we brought Aldi in, and Aldi's gone non-contingent. We're going to open Aldi's store right around September, October. So we're really excited. That's a Ridge Day in Parma, and they're taking 23,000 square feet. We've got another 5 to 15,000 square feet with 67 feet of frontage. And I think we just got an LOI today. I just signed an NDA with another potential tenant, but I'd love to hear from tenants. If you're watching this and you want to be in the Cleveland area, our center is a beautiful location. I think there's like 200,000 people in a 5-mile radius. And so hopefully Aldi's going to open up September. So it's a great location. For financing, I'd love to, anybody that's looking for financing, Dan, any of your associates, Alex, if you hear anybody at ICSC, I love referrals. I don't know if you've ever heard this, Dan, you'll close 90% of your referrals much easier than if you go direct to people. So I love referrals. Anybody that needs acquisition, refi, cash out, takeout, construction, give us a ring. I'd love to work with you. Great. I've met a lot of people through Net Lease TV, and I love what I do. And Alex, I want to thank Build Central again for giving me the opportunity to sponsor Build Central, because I think it's an amazing technology. So thanks again, guys, for being on Net Lease TV. Thank you, Dan. Thank you, Alex.
I want Net Lease TV.